So, assignment and monetary policy. Number one, what constitutes money nowadays and its role in the economy? Money is a system of value that facilitates the exchange of goods in an economy, allowing buyers and sellers to pay less in transaction costs compared to barter trading. It serves three main functions: store of value, unit of value, and medium of exchange. Money can take various forms such as government-issued legal tender, fiat money, money substitutes, fiduciary media, or electronic cryptocurrency. The role of money in the economy can be understood through its function. Store value money allows people to save it and use it later, smoothing their purchases over time. Unit of account money provides a common base for prices, enabling people to compare the values of various combination or quantities of different goods and services. Medium of exchange money used to buy and sell goods and services, facilitating transactions in the money. 2. Explain the factors and motives that affects the demand of money. The demand of money is influenced by several factors and motivates, which can be broadly categorized into three main types: transaction, pre- precautionary, and speculative reasons. And 3. What is a monetary system? How does it differ from monetary policy? A monetary system is a set of policies, practices, and institutions that regulate the supply and circulation of money in an economy. It includes the currency, banking system, and other financial institutions that facilitate transactions and investments. Monetary policy, on the other hand, refer to the actions taken by several banks to achieve macroeconomic policy objectives such as price stability, full employment, and stable economic growth. The Federal Reserve in the United States uses a variety of policy to foster its statutory objectives of maximum employment and price stability, with its main policy tool being the target for the federal funds rate. Fiscal policy, on the other hand, refers to the tax and spending policies of the federal government, which are determined by Congress and administration. While both monetary and fiscal policy are used to regulate economic activity over time, they differ in terms of the party responsible for carrying them out and the tools that are used. Monetary policy is carried out by nation's central bank, while fiscal policy is the sole responsibility of a country's government. Monetary policy strategies include revising interest rates and changing bank reserve requirements, while fiscal policy involves the use of government spending and or changes in government tax policies. 4. Enumerate and explain the types of money policy and does each type works. So, there are two main types of money policy: expansionary and contractionary monetary policy. Each type aims to achieve different goals and employs various tools to influence the economy. Expansionary monetary policy: the goal of this policy is to increase the money supply in the economy, promote economic growth, and lower unemployment. Expansionary monetary policy can achieve by lowering interest rate. This encourages borrowing and spending, stimulating business and activities, consumer spending. Expanding the money supply. This can be done by purchasing government securities by central bank or lowering the reserve requirements for banks. Easing reserve requirements. These allow banks to lend more, which can stimulate economic activity. Contractionary monetary policy: the goal of this policy is to decrease the money supply in the economy, control inflation, and maintain currency exchange rates. Boosting reserve requirements. This includes the amount of money banks can lend, which can help lower inflation. Give examples of specific monetary policies here in the Philippines. Monetary policy in the Philippines is implemented by the Central Bank, the Bangko Sentral ng Pilipinas or BSP, to control the supply and availability of money, the cost of money, and the rate of interest. One example of a specific monetary policy in the Philippines is inflation targeting, where the BSP sets an explicit target to inflation and use monetary tools to achieve it. Another example is the use of base money targets in pursuit of an inflation object which has been in place since 1984. The BSP also uses instruments such as open market operations, reserve requirements, and special deposit facility for banks to implement monetary policy in May 2023. The BSP posed its monetary policy tightening cycle, leaving the overnight reserve purchase facility rate unchanged in response to moderating projections for inflation and signs of cooling domestic demand. Thank you.